If you think real estate is always a safe bet, think again. Rising interest rates are rewriting the rules of the game. Are your investments ready to survive the shift? This could be the most important video you watch this year. Before we break down the impact of interest rate hikes, make sure to subscribe to the channel and tap the bell icon so you never miss a financial shift that could affect your future. Understanding interest rates. Interest rates are the cost of borrowing money, and they're set primarily by central banks like the Federal Reserve. When inflation rises or the economy overheats, central banks raise interest rates to cool down spending. Conversely, they cut rates to stimulate borrowing and economic activity. Understanding this lever is essential because it affects every part of the economy, especially credit-sensitive sectors like real estate. Real estate stocks. 101. Real estate stocks give investors exposure to the property market without owning physical assets. REITs, real estate investment trusts, are the most common form. These entities own income-generating real estate, like malls, apartment complexes, or data centers, and are required to pay out 90% of their profits as dividends. This chapter will also break down residential, commercial, industrial, and specialty REITs, so you can understand where your money is really going. The direct impact of interest rates. Rising interest rates make it more expensive to borrow money. This affects both developers who use loans for projects and buyers whose mortgage payments rise. As mortgage rates increase, demand for housing falls, which puts pressure on prices and can stall new developments. This chapter explores how rate hikes create a domino effect across the entire real estate chain. Effects on REITs often suffer during rising rate periods because investors shift to bonds offering similar yields with less risk. As interest rates climb, REIT dividends may become less attractive, causing share prices to fall. This section will include case studies of major REITs and how they performed during past rate hike cycles. We'll also discuss the balance between debt costs, dividend reliability, and tenant lease agreements. Investor sentiment and volatility. Investors often panic during rate hikes, leading to volatile market movements. This chapter explores how psychological triggers like fear of inflation, recession, or policy shifts can lead to herd behavior and sharp sell-offs. We'll break down volatility indexes and provide insight into managing emotional investing in uncertain environments. Historical comparisons. History is a guide. We'll examine the 1980s, when interest rates soared past 15%, the 2008 housing crisis, when rates were slashed to near zero, and the 2020 pandemic recovery. Each period reveals different investor behaviors, policy decisions, and market outcomes that shape how we interpret today's trends. Global perspectives. Interest rate decisions in the U.S. often ripple across the globe. This chapter compares real estate markets in Canada, the UK, Australia, and emerging markets, explaining how global monetary policy and currency fluctuations shape local property valuations and real estate stock performance. Opportunity in the downturn. Every downturn hides opportunities. This chapter teaches you how to identify undervalued REITs, analyze debt structures, assess management strength, and determine long-term fundamentals. Learn how to spot the signals that indicate a stock is ready to rebound before the rest of the market catches on. Strategies for investors. Surviving a rate hike environment means having a plan. We'll break down risk management strategies like dollar-cost averaging, sector rotation, and income-focused portfolios. This chapter also explores how to use ETFs and mutual funds for diversified exposure and lower volatility. 2025 and beyond. What lies ahead? Economists, analysts, and real estate pros weigh in on future interest rate paths, AI-driven property management, green infrastructure, and the impact of remote work on commercial spaces. Are we entering a new cycle of growth, or will rates stay elevated for years? Final thoughts and summary. Rising interest rates aren't just an economic statistic, they're a force that reshapes every part of the real estate ecosystem. But with knowledge comes power. If you understand the signals, history, and strategies, you can ride the wave or even turn it in your favor. If this video gave you clarity, give it a thumbs up. And don't forget to subscribe for weekly insights into your financial future.